The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom, how are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You were watching the Tom O'Brien Show. Let's take a look at what we got going on in the market today. I hope you all are having a good day. Obviously, some pretty interesting stuff with earnings coming out. Of course, you had Google. They did very well. Eli Lilly did not. We are definitely going to be talking about Eli Lilly and my favorite of hymns to go along with Eli Lilly. Let's take a little bit of a look right now what we got going on. We have the composite off about 0.28%. Yeah, the Dow Jones Industrial off about 0.03%. The dollar, okay. The dollar was showing a little bit of sign of weakness. Not really, though, right? We're trading in that upper 104 region. We broke down below the 104 level to 103, roughly 98. We're trading back at 104.05. You had some people talking on the YouTube chat about the potential for this dollar to kind of, roll over a little bit and then send gold a little bit higher. So definitely I would say this gold contract has been so unbelievably strong. I mean, we're making all-time highs again today, up 0.64%, trading right under that 2,800 mark, made it at a 28.01 and 80 cents for an all-time high there. Definitely if that dollar breaks down, you get gold going up, but here's the thing. I mean, this dollar is going to stay strong, right? So you have some issues with a depreciation of, the Canadian dollar against the DXY, and then you have some major issues going on in Europe. I know I've been kind of saying that the past few days, but that really is what you're seeing is a big flight to dollar. And then I would assume also gold as well, especially in countries, like Asia. Excuse me, Asia's not a country. In countries like China, but in Asia, more broadly speaking. You have copper up about, or off about 0.02%. Those NQs off about 0.54%, the Russell futures up about 0.24, and then silver's actually trading down, so a little bit of a divergence right now between the gold contract and silver. Those Dow futures a little bit sideways. You have rates going up today, of course. Let's see what else. It's kind of just a strange day. You have a lot of things kind of off. You have Google soaring, really based on kind of their earnings report and their investments in AI. Lucid's off quite a bit today. Anything else kind of important? Not necessarily. So first, and Apple's off a little bit. First things first, I really do want to talk about Lilly. So you are off about 7.82%. They cut guidance, and they just didn't do as well. So let's take a look at that a little bit. They expect a full year adjusted earnings between 1302 and 1352. That's down from previous guidance of 1610 to 1660. That is pretty intense. The drug maker cited a $2.8 billion charge recorded during the third quarter and related to its acquisition of bowel disease drug maker Morphic Holdings. Lowered the high end of its revenue outlook for the year and now expects sales between $45.4 billion and 46. The company's previous guidance calls for revenue of 46.6. And then they had an EPS of $1.18 versus the $1.47 expected, and revenue of 11.4, 12.11. Okay. Let's talk a little bit about this, right? So I had seen some headlines that were saying it's because there's a decrease in demand for their tirzepatide compounds, which are the GLP-1, obviously the anti-obesity drug. also used, was supposed to be used in diabetes treatment. I'm not so sure, right? And I read the earnings report. We're going to pull it over a little bit just to read that there really is less of a demand. It seemed what happened is that they kind of oversold, at least to wholesalers in Q2, right? They had the supply come back. Of course, they were on the FDA shortage list. They were able to make enough at some certain point, able to sell that. And it seems like the wholesalers were using things from Q2, supply from Q2 into Q3. I don't know if that necessarily indicates that you're having a demand issue with it, right? It might have been miscalculated, but I still think the demand is massive there. And I think this is what a lot of this kind of conversation is rolling about on, and this is gonna tie into Hims. But I'm taking a look at this here. This is, the earnings report that they were, posted. So it says in here that the wholesalers just didn't buy as much, right? It didn't say that the demand was less for it. So here it goes. Following higher wholesaler inventory levels at the end of Q2, Mounjaro and Zepbound sales in Q3 were negatively impacted by inventory decreases in the wholesaler channel. That can be due to any number of things. Driven by this revenue increase of 46% is driven by a 35% increase in volume and obviously 11% increase in realized prices on that volume. Majority driven, at least in the US, of Zepbound and Mounjaro. They are going to start advertising as well. So it seems in some capacity they think there might be, I would say some supply issue or demand issue, but I don't think it has so much to do with the GLP-1 drugs more than it just has to do with competitive GLP-1 drugs. They also stated that they were going to go after these compounders, right? And we've spoken about this at length, but I think it's worth kind of pulling in again. So with that kind of news, you have Hims falling off, right? And we're down 14.25% on light volume. We're breaking through that gap point on less volume than the gap, but you still have some high volume in the greens. My thought on this is that we're seeing another dip opportunity in Hims, okay? And this is just my opinion. Of course, I always going to tell you need to do your own due diligence on this. Hims does not compound tirzepatide. They do semaglutide, which is Novo Nordisk. That is still on the shortage list. They're still going to be able to compound that as they are now. And then even in the event that semaglutide gets off the FDA shortage list, they're still going to be able to compound it as long as there is a personalized note from a doctor, so they can still be in that game. The demand for these GLP-1 drugs is vast, right? And we haven't even seen Hims report revenue on that yet. So, in my head, I'm looking at this as a potential, buy the dip kind of thing, at least in Hims. It's not related to Eli Lilly. The only reason I could see him selling off in a major way is if there actually were a true demand issue with GLP-1 drugs, and I don't really see that, I guess, right? And I don't necessarily think that this circumstance here is indicative of a wider spread kind of issue with GLP-1 demand. That's my thoughts on it. Do your own research on it, but I'm going to look to see what this does kind of tomorrow, and maybe we can get a really hot bounce going on Hims, because that's what happened last month, and made some okay profit on that. Folks, stay tuned. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, everyone. Jacob Shoup, you're watching the Tom O'Brien Show. Yeah, we're just looking at HIMS. They're going to have earnings on November 4th. Just watch out for that. We'll see what this does for the rest of the week and if we get any bounce back tomorrow on any substantial volume. So, economic data. I'm going to pull over here. This is IBD. Seems like things are kind of okay. This is a really cool website you can go to, ibd.econoday.com. And it just has all kind of like the big economic data coming out. Obviously different countries, Switzerland, India, so on and so forth. We got today the employment report. I mean, this is a strong economy right now. I think right now in the market what's going on is you're just seeing a little bit of a contraction. And it's more of a consolidation just waiting up until what happens during the election. But I mean, this is the ADP employment report. I mean, you had a consensus range of 75,000 to 129. You take that middle there at 115, and then the actual was 223. So really just blew that out of the water. What else? You had GDP. So the economy grew at an annualized pace of 2.8% during the period. That's below the 2.9% growth expected. Lower than the 3% growth in the second quarter. So you have this slowing economy. So you're beating the inflation. You do have a strong job number, or employment report rather. We're gonna have Feds talking soon here. A lot of interesting stuff going on, but this is still a very strong economy. And not only is it strong, but when you have the rest of the world weak by comparison, and really even objectively, I would say, that sets up some really good times for us going forward, especially in the SPY and kind of related indices there. Let's take a look at SMCI. Ooh, just had that number flash across my screen. So we were talking about this a while ago, and listen, if there is a company that is in the middle with these big hyperscalers and is doing things to kind of push forward large server centers, and I'm against it, it's because they've done something very bad. And this company has done something very bad. And there are auditors who are trying to fix that left, essentially. You're trading down 31.47. This is not a dip I would want to get into. This is a massive gap down on pretty high volume and for very good reason. Of course, they contracted a little bit in the past. Obviously, they went through a split, but everyone was kind of like, whatever. A 10K report, not a big deal to push out. And then they didn't meet, right? That extended date, which is super bad. And then you have the Hindenburg report come out. We're going to bring this back over here just to kind of look at it to remember, right? a $35 billion server maker in Silicon Valley, 3-month event. And again, yeah, Hindenburg Research, obviously they're highly biased because they've taken out short positions in these companies. But it doesn't mean that everything they're saying is necessarily incorrect. Of course, I had an issue with how they approached the Roblox short in a major way, but it actually did create actually some policy change over on Roblox. So let's see here. Included interviews with former senior employees and industry experts, as well as review of litigation records, international corporate and custom records, found glaring accounting red flags, evidence of undisclosed related party transactions, sanctions and export control failures, customer issues, temporarily delisted in 2018 for failing to file financial statements. 2020 was charged with SEC for widespread accounting violations. Okay, they're not doing this right. They're not recording the books correctly at all. So essentially, they had a auditing company come in, and the auditing company said, "We're not doing this anymore." EY, which was the auditing company, resignation letter stated that in part it was no longer able to rely on representations from the company's management and audit committee. So they're lying to the accountants. It's just not a good scene at all. Included, it can no longer provide audit services, quote, in accordance with applicable law or professional obligations. You know, and I knew this was just kind of bad when they came out and said they were shipping a bunch of GPUs to clients. Like, what, they're not a GPU company. They do these server racks, right? And it's a shame because the liquid cooling is most likely going to be the future of how this kind of stuff is done. But I don't know what the heck they have going on over there, but it's not working for them. Of course, they disagreed with EY's resignation. The company added that it's, quote, taken concerns expressed by EY seriously. Yeah. Pretty nuts. It did report fourth quarter revenue of $5.31 billion, which is more than 143% increase over $2.18 billion. That are reported the same quarter of 2023, but what does it matter if you can't even trust what these guys are saying? They haven't released any. So, bad situation, toxic stock. Like, seriously, this is going to need some pretty large overhaul. In reality, what I could really see happening is this getting, eaten up by some kind of board, and they repair from there. Because I think what they're trying to do is valid, right? I mean, it's not like it's a sham kind of business that they're in. Far from it, but they're just kind of dropping the ball here. So very bad, obviously pretty big news, and just stay away from that right now, regardless of any hype on it. And there will be other companies that are going to come around and do the liquid cooling in a meaningful way. Supermicro, again, is the only one really doing it at the scale that they are, and as effectively, which again makes this a massive shame. But for the long term, I don't see any opportunity back in the stock. And this is for like actual true fundamental reasons, right? So a little bit unfortunate. Let's move over, since we're kind of in the realm of AI, to Google. Yeah, we got 3.84%. I'm going to go to Google though. Trading at 177.97. So their cloud business powers accelerating massive revenue growth, which is super fantastic. Google's parent company reported a 15% jump in year-over-year revenue, driven by strong results in its cloud computing division and boosting the company's fortunes during a costly push into artificial intelligence. That is really fantastic. Again, that's one of the big questions about Microsoft. Now, I think Azure is going to be able to kind of buttress that whole situation, but they're going to be dumping a bunch of money into AI, and so you can totally foresee quarters where their operating expenses have shot up and they're not as profitable because of it. So it's nice that the cloud division is kind of supporting that a little bit. The cloud division, which sells computing power and data centers and has been a beneficiary of the AI boom, that brought in $11.4 billion of revenue, and that was up 35% from the previous year, compared with 28.8% in the second quarter, which is fantastic. Search engine and YouTube video platform both reported slowing revenue growth for a second straight quarter, indicating troubles in the company's advertising business. That's unfortunate, because I think more and more people are using the YouTube, and I want to dip into that a little bit more, and I didn't see anything immediately when I was kind of reading their statements that they had. But I wonder how much of the stuff within YouTube at least has to do with YouTube Red, right? I'm not sure how Google has kind of boiled this down to what they want to charge people monthly for YouTube, but it's something like $20. They're pushing very heavily every time I open the app, and my main source if I'm going to watch anything, it is going to be on YouTube. I'm not really a Netflix guy or Hulu or anything like that. And, you know, it does get annoying that they put these roadblocks in place, right? Like if I shut my phone off for some reason or whatever, it will stop playing. And so they're trying to strong arm me into it, but there's no shot that I'm going to be paying $20. And so I wonder if they could maybe bring that down a little bit. They might see some more revenue, at least from YouTube in that kind of realm. We'll see what happens. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
All right, welcome back, everyone. We were talking about Google before we went to the break. There's also some interesting news besides just the cloud unit. Well, it still has to do with the cloud unit, but it's something a little bit different than just more people using the service. They've also said that Spotify Technologies and Paramount Global are using a new chip that is designed with technology from ARM Holdings to power their streaming service. That is a chip basically used for the cloud. So they made the new Axion chip. This is Google. This is a CPU available to all customers on its cloud service. It's pretty cool. It is expected to compete for software developers' budgets against traditional offerings from Intel, and AMD, which neither of those need that in any capacity. The latest major cloud computing firm to offer the chip made with technology from ARM. I just want to see how ARM's doing right now. Yeah, still had some issues. I believe that was with Qualcomm or Broadcom. I can't remember exactly what it was, but they have some issues with getting access to it. Let's see here. Then Amazon and Microsoft have also created their own ARM-based CPUs. They ran out to developers and Ampere Computing. This is what we're talking about, right? You have these massive data centers, massive cloud servers, and you're going to be able to rent out the AI from these people. It's not really necessarily apparent, I think, how these will distinguish themselves yet. I know Google was initially trying to go with one that really learned who you were, so you could have it, like on your phone or something like that. And it would just kind of essentially track your actions and learn you a little bit more. I'm not sure what that is essentially with Amazon's cloud and Azure, but regardless, this war is on in a major way. Let's see what else with that. Yeah, Google said its chip, which sells its service called an instance, is about 60% more energy efficient than conventional CPUs, and every watt of power saved can be used for other tasks such as powering artificial intelligence, said Mark Loyemeyer, which is the Vice President and General Manager of Compute and Artificial Intelligence Infrastructure at Google Cloud. So very interesting getting their head in the game on that as well. So Google seems like it's doing okay. And, there's a lot of lackluster stuff going on, if I get back to the actual chart, for quite a while here. So it's nice to see it kind of bounce up and still be a major player. It's always going to be a major player, no doubt about that at all. Okay, let us speak on... Where is it? Okay, I wanted to talk about Bitcoin. I'm trying to find it here. Yeah, so you're making all-time highs in Bitcoin. I think we made it to 72,000, which is pretty nuts. But there is some interesting stuff going on that actually might bring up some issues with legality regarding Bitcoin, which, okay, yeah, so we're right under that 72,000 mark, which is nice for those guys. You had some nice cash flowing into ETFs, which is huge. Yeah, let's see here. The continuation on trends we've recently seen established in this space are occurring. This is the CEO of Front Financial. We're in the early phase of global liquidity cycle, and we would expect lower interest rates and fiscal policy liquidity to continue to act as a tailwind for Bitcoin over time. So that is a really... This is what I think is kind of cool, at least about the traditional adoption of things like Bitcoin, is because people are now starting to at least express how they think Bitcoin works, right? Because a lot of this idea was, okay, interest rates go up, there's because inflation is occurring or something like that, so we get into Bitcoin, and other people saw it as, you want low interest rates, and the market essentially, and this is kind of what I think of it, the rest of the market just gets so oversaturated that was the only thing they could choose. But it's definitely a unique kind of asset on that. Now, you have some things going on, right? You had the the Federal Reserve Bank of Minneapolis suggested that Bitcoin might be a massive issue for government fiscal policy. And if this is proven to be true, or whoever up there making the monetary policy determines that that actually is kind of accurate, this asset can be in a world of hurt, right? So according to them, the Bitcoin creates serious challenges for governments, particularly when maintaining a permanent primary deficit. That's what we're in. In the paper, the analyst claims that Bitcoin, being a decentralized digital currency, competes with government-issued securities, making it harder for governments to manage their finances. And this is a quote from it: "A legal prohibition against Bitcoin can restore unique implementation of permanent primary deficits, and so can attacks." Yeah, it's pretty insane. So in 2024, this is some data on it. The primary deficit was 1.8 trillion. and the national deficit was a staggering $35.7 trillion. Researchers suggest this deficit can be sustained indefinitely so long as, honestly, something alternative like Bitcoin doesn't mess up the balance. The paper describes Bitcoin as, quote, useless pieces of paper, given that it's not backed by any real resources. Yeah, so this is a quote again from the paper as well. When there are laws against private sector bubble assets, it is easy for the government to design policies that uniquely implement a permanent primary deficit. They suggest a high enough tax might be sufficient without resorting to an outright ban. And let's be real. I mean, you know, the strongest force in the world is the Western banking system, really the American banking system in a major way. Of course, Europeans are up there as well. And this is something they can't kind of influence, you know, in a major way, which has a big issue. Additionally, you have federal investigators probing Tether, which was a stable coin. That becomes a major issue as well. So it's investigating Tether for possible violations of sanctions and anti-money laundering rules. The investigation, which is run by the prosecutors at the Manhattan U.S. Attorney's Office, is looking at whether the cryptocurrency has been used by third parties to fund illegal activities such as the drug trade, terrorism, and hacking, or launder the proceeds generated by them. And, you know, so is the US dollar. That is what I kind of don't understand with it. I mean, I understand what the point is, right? I mean, they want to essentially regulate this kind of stuff in a major way, and they want stronger regulations on it than currently exist. So the Treasury Department has been considering sanctions on Tether because of its cryptocurrency's widespread use by individuals and groups sanctioned by the U.S. That's including the terrorist group Hamas and Russian arms dealers. That would prohibit, if that came around, would prohibit Americans from using it. So if you're in Tether, bad issue. I think additionally too, you will at some point kind of see some, it's not going to be a cryptocurrency, but it'll be some kind of e-coin come out that will be a stable coin, which I think this helps. Now, I'm not saying there's some massive conspiracy and this is what's occurring, but it kind of helps the whole plot, right? In a sense of, you want this e-coin to come out, you can really issue and, annihilate coins in circulation as you see fit. This opens up a lot of different tools for monetary policy makers. And yeah, I mean, totally. Even things like Monero are actually really more used by entities like that. We'll see what happens. It is kind of unfortunate, I think. But nonetheless, it's what's occurring. Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. Let's take a look right now at Reddit. X was talking about it in the YouTube chat. Market cap of 11 billion skyrocketed today, trading at 116.54, up 42%. The high of 118.25 is an all-time high right there. Great growth. So the social media company surged past revenue estimates with 68% growth and turned its first quarterly profit as a public company. It said Tuesday that it earned an adjusted 16 cents per share on sales of $348.4 million for the September ending quarter. Analysts were projecting a 7-cent loss in revenue of $314 million. And they just have a bunch of people. So daily users up 47%, which is so kind of weird to me. I mean, obviously it's massive, right? I don't use Reddit. I used to when I was younger, and I just don't anymore. So I don't get that kind of on the ground look at what's going on. But I'd be really interested to see who these users are, what their demographics are, where they live, that kind of stuff, and really what they're using it for as well. So the sales growth was helped by a 47% year-over-year jump in daily active unique users on the app website, about 97.2 million. Selling from advertising increased 56% year-over-year to 315 million. Reddit's other revenue category rocketed 547% to 332 million. A social media firm has reached deals with companies such as Google and OpenAI to license its user content to train AI models in X. That's why I wanted to bring this up, because you were 100% right in saying that. It is the same thing I've said with Tesla, right? And it's all about training data, model training data. And X, you were 100% right. He says in the Den, Reddit could be an AI play if they can monetize their customer posts data through AI. And that's 100% what they're going to do. They already have the license for it. It's going to get more and more prevalent. If you read Dune, the spice must flow, and really the answer in our world is the data must flow. This is the kind of stuff, these analytics on people is what makes everything so remarkably valuable, right? It's not just the ad sales anymore. It's being able to convert that data in better ways, right? Anyways, what are they saying? Okay, the forecasts on here. Easily topped estimates. They guided sales of 392.5 million at the midpoint of its range for the last 3 months of the year. Analysts were projecting Reddit would tally 360 million in sales. Reddit also projected it would reach 110 million to 125 million in adjusted earnings, EBITDA. Analysts were looking for 87 million in adjusted EBITDA for Reddit's fourth quarter. That is growth being up 47% year over year is kind of crazy, right? And I need to look a little bit more into that of where that's driving from. I'm not saying it'd be kind of weird, right? If you get, some Hindenburg thing coming out. I was like, hey, listen, actually a lot of those are bots or something like that, or they don't stay on very long, or whatever. In a sense, too, it also is acting as like a marketplace. I think they have the ability to add that if they haven't already. I believe X said as well, Reddit, the upcoming meta. That's an interesting thought. This idea of like Web3, right, where you go on to something and it's just everything in a single kind of environment, really started as a growth out of concepts of Reddit, right? And now people who are like into Web3 don't like crucify me over that. I know there's more to that. But this idea that, you could go to a single spot and find a bunch of different things and navigate from there is, somewhat interesting. I wonder too if they could do something like Meta did, like, add in Etsy plugins or something like that, if that could generate, some kind of revenue. It probably wouldn't be massive. But yeah, really the main thing is their data they have on people for training certain AI models. That will be massive, and it'll make people use things like OpenAI more because they're going to be trained on more data from how humans operate. That doesn't always go well, especially with things like Taybot or like early on with, whatever Bing was doing, where they were just, and Google as well, where they're just giving horrible answers based on user posts. But, OpenAI, a vast preponderance of its revenue is generated by people spending money to use it, And one of the way these LLMs can be somewhat profitable going forward as well is kind of like licensing them out. Let's say, I don't know. If I want to buy food from a restaurant or something like that, and they don't want somebody to pick up the phone, I can just talk to the LLM and it can answer all my questions. And it seems like it's a human, right? Because it's trained on human data. And so we'll see. Honestly, a $10 billion market cap, interesting, And again, I'm just really stunned by that user growth. And I'd like to see more about it before I ever formulated an opinion on getting into Reddit. We can talk some more, I guess, within the tech realm. You have Meta developing its own AI search engine, which is kind of interesting. Zuckerberg has really changed the thing up quite a bit. So he's working on developing a search engine that crawls the web for information to provide people using its AI chatbot. Information reported on Monday. It's looking to reduce its dependence on Google and Microsoft Corp's Bing, which currently provides information about news, sports, stocks to people using Meta AI. Shares, obviously, in Google really weren't affected by that in any capacity. But it is interesting. Again, you're going to get a lot of money pouring in from these huge tech companies in a sense that they can become more, independent. I think with Amazon too, you had some news come out that Amazon's cybersecurity group was kind of finally given, a name or is now front-facing in some capacity, which is somewhat interesting. I was talking to my buddy the other night. He is a sysadmin for Frontier, and he knows a lot about this kind of stuff. And so I try to keep up to date or find some new things by speaking with him. And I had brought up that story about Cisco we were talking about yesterday, right? And it was what the Cisco CEO said is that, we're going to start serving these hyperscalers in a major way, and it's going to pump a bunch of money into them and stuff like that. It was interesting to hear what he had to say about that, right? Because at least on Amazon's front, it seems like Amazon does a lot of things very much in-house. Even some of their network structures, they run like very kind of thin structures, which is obviously good to keep it simple and everything like that. But you also see, again, like things with Meta doing this or, whatever have you, right? Where you're just getting this kind of, we're going to start developing these things in-house and we're going to do this in-house instead of everything in-house. And I'm not saying that Cisco doesn't get any part of that or anything, but I wonder if you start seeing, again, this more independence movement, is what Cisco CEO is saying actually going to materialize? And we're going to have to wait a little bit more into Q or just fiscal year 2025 to kind of see that. But it is interesting to note. And then Microsoft as well, the GitHub unit made a deal with Google and Anthropic. So GitHub's Copilot coding assistant will offer new AI models as option for users who want to switch from OpenAI. Actually kind of interesting too, especially considering Microsoft invested a bunch in OpenAI, but it seems like they've distanced themselves a little bit. So yeah, a lot of new stuff going on in that AI realm. And I think it's revenue generating, which is exactly what we want to see from a lot of these companies. Folks, Sarah there, we'll be right back for a short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. Jacob Shoup, you're watching the Tom O'Brien Show. We just have a short segment. Not really much actionable advice on this one, but I interacted with this company last night, and I just thought it was kind of interesting. This is Frontier Group Holdings, up about 1.53%, but they did drop down on a bigger than expected Q3 loss. Basically, we reported a bigger than expected loss in the third quarter. This was on Tuesday, as overcapacity on domestic routes hits its revenue first half of the period. Situation of oversupply and subsequent discounting placed additional strain on ultra-low-cost carriers such as Frontier as they grapple with stiff competition. The real reason I want to talk about this, not because I am even slightly interested in investing in this stock or even playing it, but it was a super cool experience doing it. I'm going somewhere at the end of November, and they give you a breakdown of everything that you're charged. The airfare was literally just $25. And granted, I'm going to Cleveland at the end of November, so there's a non-zero chance that they think that was a mistake and they just sold it to me anyway. But the greatest portion of the fee in these things, one, it was just the ability to interface with the website, right? So that carrier fee, that was $44 based on a $25 plane ticket. And the rest of it was taxes, which is like unbelievable to me. But I just thought it was kind of a really cool, concept essentially, right? And I remember a little while ago, they were these ideas of people pushing through, they wanted the airline carriers to kind of list out you know, what they were charging and how much they were charging for it. And they were like, hey, we're not going to do that. That's going to be too much money for us to redo that, even though Frontier has it baked into it. This is going to be my first time flying Frontier. I have no idea if I'm going to have back pain afterwards. I'm going to report back to you, and this is what we bring to you at TFNN. Again, wrap up the day, avoid SMCI. We might have a potential bounce in HIMS. Just make sure to check that out, watch it. Thank you so much for joining me. We'll be back tomorrow morning at 9 a.m. with Tommy O'Brien in the morning market kickoff. Take care.